Hello, my name is Renata Garrido, and I would like to welcome you to this continual covered report of HIBBETT Sports Inc. as part of Tulane University's Burke and Road Reports of 2016. HIBBETT Sports is a sporting goods retail firm. After careful analysis, our team, made up of Sasha Ackerman, Jerry Shaw, Xuanfan Li, and myself, has identified a 12-month target stock price of $42 with an investment rating of market outperform. Our agenda for the presentation will be as follows. First, we will provide a company overview for HIBBETT Sports Inc. We will then look into HIBBETT's industry analysis and its main competitors. Next, we'll discuss the company's growth strategy. Then we'll touch on the risks that HIBBETT faces. Finally, we will provide with the valuation model utilized for this analysis and present our investment thesis. HIBBETT Sport Inc. is an Alabama-based company that operates sporting good retail stores in small to mid-sized markets. The company focuses its activities mostly in the South, Mid-Atlantic, and the Midwest regions of the United States. On August 2015, the company operated 1,041 retail locations in 32 states, with the largest concentration of stores in Alabama, Georgia, and Texas. HIBBETT offers a broad selection of brand name quality, footwear, apparel, and athletic equipment, coupled with a high level of customer service. As illustrated on this pie chart, HIBBETT's net sales consist of 47% from footwear, 31% from apparel, and 22% from equipment for the fiscal year of 2015. We identify 5 strengths that make up HIBBETT's competitive advantage. The first is regional focus. HIBBETT is well known for operating in small counties with populations ranging from 25,000 to 75,000 residents. Therefore, HIBBETT is able to minimize its corporate expenses and achieve economy of scale on marketing activities. Another strength is logistics. The company keeps operating costs low with a single distribution center located in Alabaster, Alabama, from where the company receives and ships most of its merchandising. In terms of merchandising, HIBBETT offers product ranges specifically tailored to the local consumer's needs, in addition to maintaining a high level of quality inventory at all locations. The company also excels in superior service. To attract and ensure repeat customers, HIBBETT's employees are highly trained and educated about all products to provide a unique in-store experience. HIBBETT's final strength is its information system. The company recently implemented a new point of sale system that improves financial control, inventory control logistics, and replenishment.
The sporting goods industry is relatively stable with low revenue volatility and is currently consolidating, which is indicative of an industry in the mature life cycle stage. GDP is one of the primary indicators used to measure the size of the economy and to gauge a country's economic health. Figure 2 shows the relationship between United States annual GDP growth rate and the American sporting goods stores annual revenue growth rate between 1993 and 2013. Well, the chart shows that sporting goods stores revenue is more volatile. The sporting goods stores revenue growth rates are positively correlated with GDP growth. Sports are just one component of American culture, with football, basketball, and baseball dominating the sports landscape. Sports participation rates drive demand for sports goods. A focus on health and wellness is growing in the United States market by the proliferation of health products and practices. The trend of rising health consciousness has spurred demand for products that reflect healthy lifestyles, including athletic footwear, apparel, and sporting goods. The e-commerce industry has exploded over the past decade as American has increasingly opted to purchase items online rather than at traditional retail stores. HIBBETT's peers in the sporting goods retail industry include public companies such as Dick's Sporting Goods Inc., Sportsman's Warehouse Holding Inc., and the Big Five Sporting Goods Corporation, and the private companies like Sports Authority Inc. and REI. When compared to his competitors, HIBBETT has the lowest price-to-equity ratio of 12.38. This number is lower than Peter Lynch's 15 times of earnings per share. Additionally, HIBBETT has the highest return on equity ratio among his peers. By analyzing HIBBETT's financial reports and conducting an interview with the company's top management, our team identifies 4 growth strategies. HIBBETT is planning to rapidly expand its operational scale over the next 5 years. As illustrated from this map, the company does not currently have locations in the west and northwest of the United States. HIBBETT plans to open more stores out west and construct a new distribution center in California, close to where the company imports most of its merchandise. The company also plans to launch an omni-channel initiative to bridge the gap between e-commerce sales and brick-and-mortar stores. This channel will increase efficiency and reduce costs by allowing customers to check their local store's product availability online and enable HIBBETT to ship merchandise directly from the store closest to the customer instead of from its central distribution center. Our employees are trained to have a broad knowledge of the products offered at their store, which differentiates HIBBETT from his industry peers. In conjunction with its extensive employee training program, HIBBETT places a large emphasis on customer experience and loyalty, ensuring that shoppers will return to the stores for all of their needs instead of going to the company's competitors. HIBBETT faces operational and financial risks. In terms of operational risk, the company could be affected by seasonality, regionality, and its vendor relationships. Seasonality means that HIBBETT sales fluctuate by seasons. According to historical performance, HIBBETT experienced its highest sales volumes during the spring. There are also additional factors, such as merchandise mix, sporting events, and weather that can impact sales. Sales also fluctuate according to regional factors, since HIBBETT focuses on specific regions of the United States. For example, if the company faces problems about regional government regulation, or weather, or natural disasters, those factors will directly impact the company model. Meanwhile, HIBBETT does not produce its own products and instead relies upon a pool of vendors for all of its merchandise. The company must maintain a good relationship with its vendors to guarantee a wide variety of products and to be able to purchase quality merchandise from its vendors at a competitive price. HIBBETT has a low level of financial risks. The company's capital structure is very conservative. HIBBETT carries no debt because of the high level of cash flow. With this amount of cash, the company is able to finance its expansion plans internally. However, there is one drawback to having a high amount of cash. Some experts believe that this level of cash is a wasted asset and may lead shareholders to pressure the company into paying dividend. It is important to highlight that this is not the case for HIBBETT. Instead, as was mentioned earlier, the company is using this excess cash to finance its growth.
Our team used an equally weighted combined valuation model of discounted cash flow methods and relative multiple methods. We use both the free cash flow to firm and the free cash flow to equity method for our discounted cash flow valuation. We calculated cost of equity and the weighted average cost of capital using the capital asset pricing model and the weighted average cost of capital method. Using the discounted cash flow model to calculate the present value, we reached a 12-month target price of $38. Our team also used the relative multiple methods to forecast the 12-month target price for HIBBETT Sports Incorporated. We considered several multiples to calculate the target price. To determine the value of the multiples, we took into account HIBBETT's historical multiples, as well as those of the company's peers. Using this method, we arrived at a 12-month target price of $45. By combining these two methods together equally, we finally reach a target price of $42. In conclusion, HIBBETT's current stock price is $34.16. Considering the company's relatively low price-to-equity ratio compared to its peers and its ambitious expansion plan, we conclude that HIBBETT stock is currently undervalued. Our team has identified a 12-month target price of $42, which gives a return of 22.95%. We have assigned HIBBETT stock an investment rating of market outperform. Thank you for viewing our Burke & Road Analyst Report continuing coverage of HIBBETT Sports Incorporated. The Burke & Road reports are produced solely as a part of an educational program at Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.